SoFi just reported earnings last night and it blew up huge. And now we're also going to be covering Amazon, Microsoft, Apple, and Meta earnings that are also happening this week. Now, remember, earnings are exceptionally high risk. And while SoFi is up bigly this morning before the market opens, we can't guarantee that that's ever going to happen, right? All right, so SoFi last night had earnings, and this is the options chain on SoFi this morning. Now, I don't know if it's had the implied volatility crush just yet. I don't think it has, based on the fact that the $21 strike is where it closed yesterday, 21.02. Looks like mid price this morning it's going to open around 22.66. So it looks like it hasn't moved just yet, which is perfect. That's what we want to see. Now, going into the options chain right here, this is how you can see the expected move of a stock. Expected move of a stock. So the way that you do that is you price an at the money straddle. Now, what does an at the money straddle mean? It means going to the at the money price, which in this case is $21 right here. You're not going to actually purchase this. You're just getting the price. Now, 106 plus 104 mid price came out to 208. Okay, so before earnings, this cost $2.08, meaning 2.08 is the most premium you would pay to do this. Okay, now it can go up 208 or down 208, but market makers like to juice up. They like to juice up the price of the options before earnings. And so the rule of thumb is you take the 208 and you multiply it by 85%. So really the expected move is $1.77 in either direction. So let's go to SoFi. Let's look at SoFi's chart. All right, it closed yesterday before earnings at 21.02. Now, it was right in the middle of this order block, but still trending upward. Now, I wouldn't have taken this trade. You couldn't have paid me to take this trade, even with your money, because first, it closed under the 10 EMA, which means that it was running out of steam. And then second, in an order block, which means it has a lot of resistance. Now, like I said, this morning, it looks like it's going to open up. We'll see how it ends at the end of the day, but we need to find that expected move, which is $1.77 up. So from the close, up $1.77 and $1.77 down. Now, what the market makers are saying is it can go anywhere. It's most likely to go somewhere between these 2 points right here. So if you thought you were a genius by buying an at the money straddle, meaning if it goes down, you'll make tons of money. If it goes up, you'll make tons of money. But if it doesn't break outside of that expected move, you're actually going to lose a ton of money. And that's possibly what could have happened to you. Now, it looks like it's going to open right at the very tip of that expected move right there. Right at that very tip, over 8% either direction. So this looks like it might have had just that right end where that expected move is going to be. Now, does that mean it happens every time like that? Of course not. They're trying to find where is the most likelihood of this happening. And so SoFi is opening right at the very end of where that's at. So let's go to the next one, Amazon. Now let's run the outlier 9 on these others, right? SoFi already had its earnings, so it doesn't matter. Let's run the outlier 9 to see if this is set up in the most bullish trend as possible. We start with the market, with the trend, the signal, and the breadth of the market. So the market, the S&P 500, has a bullish trend, 10 over 20, price over 50. With a buy signal. All right. So this is moving up with a buy signal, which is great. That's going to help your momentum in the market. Lastly, however, market breadth is not looking good at all. In fact, market breadth crossed over bearishly last night. Now, I woke up at 11:11 p.m. last night, and I got to thinking to myself, I need to come up with some sort of naming convention for this, because this is one thing where we're showing how many stocks have buy signals versus how many stocks have sell signals. So now we have a bearish crossover here showing more sell signals than buy signals. But we also have what's called donkey channels now. Now, donkey channels is a funny name to say Donchian channels to see how many stocks have more uptrends versus downtrends. We actually are seeing more downtrends today. Downtrends are going down. Market cycle move up and down as a leading indicator here. This is so sick. If you guys have gone back and watched any of the videos, we can really see how the momentum match, aka what is the breadth doing, be a leading indicator in the market. And Chris's humble opinion here, I feel like we may be ready for a short-term pullback. We might be ready for a short-term pullback. So I will not rank breadth anything bullish at all. But let's now go into the sectors. We're going to start with Amazon, which is going to be in the discretionary sector. And so let's pop over to Amazon's let's pop over to Amazon's chart real quick and let's take a look at this, right? In Amazon's chart, we can see the breadth down here in the discretionary sector has crossed over bearishly as well, meaning it doesn't have the momentum match we want to see. The fear and greed for the sector is up ever so slightly. Yesterday is 64.21, today is 64.23. So for the breadth of Amazon, it's going to stay red. It's going to stay red. So this is not looking great for Amazon. Next, we have the 10 over 20, price over 50 EMA. So this is our bullish trend right here with a buy signal. So it does have some momentum going on the stock itself. But remember, only 30% of the move is due to the stock. 70% is due to everything outside of the stock. It is getting more greedy, which is what we want to see. And then lastly, are there any outlier blocks on top of Amazon? Let's go take a look. Any outlier blocks that would be resistance on top of Amazon? No. So that looks pretty darn good. That looks pretty darn good. Now, this actually puts it in weak buy category. All right. So in the weak buy category for Amazon. Now let's take another look at the options chart. Okay. Let's take a look at the options chart here. We want to go to the expiration that's closest to earnings. And so it's going to be right here. Earnings are set to happen on Thursday, July 31st. Okay. So this expires the day after. So this is the closest options chain. Now let's go price the at the money straddle. So 655 and 605. All right. So the total of that is 1250. Now remember, we take 85% of 1250. So 1250 times 0.85 gives us $10.63. $10.63 up. Now, you really want to do this on the closest candle, which is why SoFi is a better example, because SoFi had its closing price right here. And so we can mark, what that looks like. This one, the expected move here. So Amazon does have a couple days, so it could move a little bit more here and there until the earnings actually happen. But we're going to price up 1063 either direction. So let's say from right here, 1063, come on. 1063 up and 1063 down. Good gravy. My clickers are just not working today. 1063 down. Now, that's how much move Amazon is looking to do, right? It could be pushing up as high as 243 or as low as 221, and current price is at 232. With the weak buy on here. So in this case, I would give Amazon a beat up used Lambo. How about that? A used Lambo for Amazon. How would you rank this in the chat? That's what I want to hear. Right. Of course, it's not a strong buy. Nothing we're going to look at is going to be a strong buy today, I would imagine. Could it be? Absolutely. But I'm not putting my money on that. So looking at this, right, Amazon from a technicals perspective, we've got a weak buy. From a move perspective, we could be looking at a $10 move up or a $10 move down. That's what I see coming up for Amazon. Let's go to the next one here for Microsoft. Let's reset for Microsoft here. Now, remember, we're in the same market, so this is not going to change. Microsoft, however, is in the tech sector. The tech sector versus Amazon in the discretionary sector. So we do need to redo the sector here. Now, the tech sector actually has bullish breadth down here. The bullish crossover looks like it happened today, right? Maybe getting a little bit more uptrends ever so slightly and less downtrends. So I'm going to say breadth on this case, the momentum match on breadth is looking pretty good. However, fear and greed is going down. This is the average fear and greed score for everybody in the tech sector, and it's moving down. So we're going to keep that bearish. And then Microsoft itself, we've got the buy signal with the 10 over 20, price over 50, moving up right here. So we're going to say it's got a trend and a signal that's bullish. The fear and greed moving up ever so slightly. It's not doing a whole lot, but it is moving up. So we're going to give it that. And then let's go look for any outlier blocks on top of Microsoft. And by the way, if you don't have these on your charts, we actually have a free script you can load into your chart. So your charts look exactly the same as mine. You'll see the same outlier blocks. That's over in our Discord. When you sign up at outlier.com, we'll send you a link to our Discord so you can get your charts to look exactly like mine for free using the free TradingView plan. And look, yesterday it closed right on top of this order block, which ended the order block right here, ended the outlier block. So I don't see any outlier blocks on top of Microsoft. So this one, you know what? Eat my words right here. Microsoft actually does show to be a strong buy. Microsoft does show to be a strong buy. And that's why we're looking at this objectively, right? I can't tell the future, neither can you, but we can at least put all the data in our favor to see strong buy over on Microsoft. Now let's go look at the expected move on Microsoft here. And let's clear this one out. Remember, we're in Microsoft. We're going to hit the at the money straddle. We're going to price that out. And it comes out to 2095 or 2115, I should say. 2115. 2115 times 0.85 means 1798 either direction. So 1798 up versus 1798 down. So we're going to move this one here, which this is only about 3%, 1798, about right there. And then 3%, 1798 down. All right. So where SoFi had a expected move of around 8%, where Amazon had an expected move around 4.5%, Microsoft's expected move is around 3.5%. So Microsoft seems to be less of the three so far to be the most surprising on its earnings results. I like that. Look, we're looking deeper under the hood of this, right? And then Microsoft continues to have this strong buy. But of course, remember, this is just like running into the casino, throwing it all on red and saying, you know what, Microsoft is going to go up from here. We don't actually know, but this is what the expected range is looking like it's going to fall into. Let's go to the next one here, Apple. Apple is still in the tech sector, so we won't have to redo the tech sector. So we'll keep this the same, but let's reset for Apple here. And Apple actually finally has hit a bottom, right? I mean, Apple is one of those stocks like AMD that has really struggled this year. Like, look at this. Look, you would never expect Apple to be struggling, but it was for ages. All right, so looking at Apple, let me remove all my drawings here real quick. Looking at Apple, the trend is bullish right now, 10 over 20, price over 50. We've got a buy signal that came back here, and it's been getting way less fearful, way more greedy. So this is looking like it might also set up really well. And then it actually is right inside of a bearish order block, but it has two bullish order blocks underneath it that can act as support. So because of this is order block city over here, right? This is worse than Gotham City. So there's no way that I'm going to put a bullish metric on this one right here. Apple at 860 on the at the money straddle. What would that be? 8.6 divided by 2, or I'm sorry, not divided by 2. Let me reset this. 8.6 times 0.85 is 731. So that's the move up or down, 731. 731 up. And 731 down. All right. So roughly 3.4%. It's like, you know, I didn't plan it this way, but it seems like each one of these is getting a smaller and smaller and smaller expected move. So Apple's expected move into earnings could be as low as 206 and as high as 221. Current price at the time of recording this around 214. And let's go to the last one here, Meta. Meta is not in the tech sector. As much as you want to think it is, it's not. It's actually in the communications sector. Communications sector breadth looks terrible, getting way more downtrends, way more sell signals, and it's getting way less greedy, starting to head towards fear. So there's no way I'm lighting these up bullish here. However, Meta just got a buy signal today, right before earnings on July 29th. Now, keep in mind, right, you want to have the full context together. And even with the buy signal on here, that is a ton of risk leading into earnings. So I'll give you a buy signal here. Let's double check that trend. It looks like it may be super, super tight on here. I don't want to mess it up. Yeah, it did. Look at how compressed this trend got right here. So it is still a bullish trend, 10 over 20, price over 50. The fear and greed has been going down. Did it continue to go down? Oh man, it went up ever so slightly. So Meta's fear and greed went from 6172 to 6175 on the day that I'm recording this. So I'll give it a green light right there. But it does have an order block on both sides of it, right? And so I would leave that off. So this one just constitutes weak buy ever so slightly. Now let's go look at the options chain on here, Meta. And let's take a look here. Oh man, Meta is, oh, well, it's a $700 stock. So this is going to be a lot bigger of a move dollar wise. When did Meta become a $700 stock? I remember being a $300 stock. You ever look at stocks and you're like, when did it get that expensive, right? Costco is that to me. And Meta is that as well. Okay. So current price of Meta is at the money straddle is at 44.23. Remember, pricing out the at the money straddle price, clicking the ask button on both the calls and the puts. That gets us to 44.23 times 85% gives us a 37.60 move either direction. 37.60 is huge, huge. 37.60. All right, let's take a look at this. 37.60 is, oh man, this is huge. 37.60, it's 5.25% either direction. 37.60. All right, so Meta is expecting a pretty big move, So that takes it from current price around 717 up to as high as 755 or as low as 680. So let's go through these real quick, right? SoFi absolutely blew it out this morning, taking that expected move and just throwing it out the window, right? But the option makers, the option market makers inflated that that expectancy. So they are going to get paid on this no matter what. And for those of you who bought calls on SoFi, hey, you know what? You're going to open up to a really happy day this morning. Next, Amazon. The expected move is roughly around $10. That's it on Amazon, which is about 4.5% either direction at earnings. Microsoft's expected move is around $17, about 3.5% either direction. Apple's expected move is roughly 3.4% either direction, around $7. And then Meta, big boy, coming to the table, a $37 move either direction, around 5.5%. So as low as 680 or as high as $755. Pretty huge moves out there. So there you go. That's the earnings preview coming up for those stocks. Now let me know in the chat down below which stocks you're looking at this week. And of course, if you're looking to save time, make money, and start winning with less risk, click one of these two videos and have a fantastic day. We'll talk soon.